The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. Just one big cuddly little bear. Here on a beautiful September 10th, as I tell many people move to Florida, you get 8 months of perfect weather, 2 months where it's a little too cold, 2 months where it's incredibly, miserably hot, and 8 months of perfect weather. Well, as of the last week, we've moved into that perfect weather, and we're going to be probably riding that on into right around Christmas, right after New Year's, where the weather is maybe just a little brisk out there, but I enjoy it. And, of course, it's cool enough that I could turn my hot tub back on and have a leisurely hot toddy before I go to bed at night and not feel like I've been through the ringer. Absolutely a beautiful day. And it is an interesting day as we speak. Go to the, where is it at? It's got to be here somewhere. I got two of them, huh? Okay, I got that. I must have missed something here. Let's go to it. Okay. I think I hit a wrong button somewhere. We're up 5 points on the S&P cash. That wrong button didn't move the S&P, by the way. It just refreshed my charts and quote system. Up 5 points on the S&P cash, 1993 and 71 cents, up basically 0.25% on the S&P cash. When we look at the volume, it's coming in at 1.74 billion shares. So volume is okay. Why not as strong as yesterday? But I have a feeling we can, a lot of pin action on Apple yesterday that we are not having today. And yesterday I said that we were in some kind of asymmetrical triangle. I don't expect for us to break out, and we'll get to when I think we're going to get close to it. But I think we're going to be hovering around this 2,000 level on the S&P cash right into a week from this Friday, and we'll get into the reasons why, too, as we move along. But not expecting a great deal of weakness till probably a little bit after expiration, and I'll tell you why also. Of course, it is a beautiful day. And, of course, on this day in 1960, Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela convened in Baghdad to form the Organization of Petroleum Exporting Countries, or OPEC. What most people don't know, that this wonderful little group was put together by, of course, the miserable commies over there in the far eastern part of Europe. And it is kind of a nice way to put the screws to the Americans. Of course, by 1974, they had us standing in lines, and we may not need them soon if we continue to get production in crude up. Maybe the rest of the world will still need them, but it would be nice to be free of the black crude, the Texas tea. Oh, I love the Clampets. So, but on this day in 1960, it was the beginning of the cartel and the monopoly that ended up being OPEC and giving the Mideast such power over everybody. Of course, we're looking at the remnants of the aftershock of Apple, what I call the Apple-teeny hangover. If you like that movie at all. We've got Apple up $2 right now. No big deal. 76 million shares as we speak. Right now, there was a book called Iceberg Risk. Basically, it said everything was hedged to everything, and the more people put hedges on, the less that the market is actually hedged. And at this point, we basically have the control rods of a nuclear reactor in Apple. All they have to do is go in there and buy a few shares of it, and it's right back up. And, of course, we have some of the biggest stock manipulators. If you love Jesse Livermore, a stock operator, in Carl Icahn, and as far as I can tell, he's not been blowing out shares of this yet, so he doesn't think that it's over. But my guess is that we are starting to see at least a few of them. It's kind of nice to have Tom O'Brien after this show report on all the people that were selling. And maybe it's smart money and dumb money trading hands. I tend to think that there isn't a great deal left in Apple up here, mostly because of the law of large numbers. But I have a few notes on what is a hangover, pretty much for what could be it. I had somebody make a comment in the Tiger's Den here, and we'll have to get to that because it's erroneous. But I digress. So let's get to the points. I didn't have slides for all of these. Pretty much the takeaways from yesterday was that Apple left far too many questions in the minds of investors, and it took pretty much a day for the big men of Wall Street, like Carl Icahn, to come out and plant the flag. It started off fairly early today with, I'm going to call it the Apple appeasers. These guys are the analysts. They were sit out starting at 6 a.m. to go on CNBC and Bloomberg and tell everybody why the sky isn't falling. And for the truth of the matter, it probably isn't. But their story was so blue sky as to be ridiculous. And I scoffed. As Monty Python said, I empty my nostrils in your general direction, you English pig dog. Anyway, it was one of those things where they actually did go kind of off the deep end, doing everything they could to say that Apple's fine, nothing was going to change. But we don't see a smooth rollout of new products. We have seen the first version of a product that has many problems. There were two things going into yesterday's announcement, especially about the iWatch. And I'm going to call it that because the CEO calls it that, even though Apple and Apple's advertising it calls it the Apple Watch. No one can quit calling it the iWatch. I had a product like that no one could quit calling it the code name. We just finally gave up and ended up naming it when it went out the door, the actual code name. Be careful what you name a product while you're developing it. I'll give you that bit of an... You want to name it something that no one wants to have stick, because you won't be able to change it, and then you'll hate it years later. Anyway, there were two things that people wanted to know. One, did it have some kind of cellular modem in it so you didn't have to have your iPhone in your pocket? And the answer is no. You've got to have your iPhone. The other thing was, would battery life be more than 1 day? And would you have to take it off every night and put it on the charger? Now, most people say, well, I don't want to wear my watch anyway. Well, one of the big selling points of the iWatch, of course, is that it's going to be monitoring your bodily functions while you sleep. Some people say that some of the Fitbits and some of the other watches and bands out already was able to tell who and how many people got up during the last earthquake in San Francisco. What was it, a week ago? 2 weeks ago? Instantly, Fitbit knew that there was something going on because everybody woke up at once in San Francisco. And they had the data. It was kind of interesting to see. But part of this is going to be monitoring your heart rate, your body rate, and keeping it on. So it is somewhat problematic. Two, Apple's been talking about selling this into the healthcare community kind of as a way of all those big things and boxes hanging around people that are in the hospital. And it doesn't look like it's going to last long enough to do something like that. Maybe a different version of the iWatch to monitor patients and that kind of stuff. So basically, there were two things that people disliked about the iWatch. I didn't think that it looked all that great when I compared it to some of the really neat stuff that we've shown off in the Tech Insider Hour on the Tom O'Brien Show. There have been some very gorgeous, beautiful designs. This one looks a little bit staunch in what it did, but that's my personal opinion. Other people may like the form more than the function. But that was part of it. So people kind of worried about that. Normally, there aren't a lot of glitches in Apple rollouts. There was some in this. Yesterday, they were supposed to have a streaming live content so everybody could watch it. And, of course, didn't go off too well. And Samsung pretty smartly bought all the ads up for that company that did the streaming. So when you started streaming, you started getting a earful of, we've had a nice big phablet-sized phone for a year and a half. What are they saying is new out there today? It doesn't seem new to me. So anyway, they got a big earful of streaming. The streaming didn't work. It had glitches. It looked like everybody on the stage was melting from time to time, and people were going in and out of it. I tried to get on it before we did the show and couldn't. There was a great deal of interest on it. It's a lot of hangover here, a lot of hyperbole, and a lot of self-serving people on TV pushing Apple. I, as my heart as an engineer and a programmer and someone that has put together 4 different businesses in electronics, I always look for the loose bricks. That's what my boss and pretty much my mentors taught me to do. You want to find something that's a rifle shot. You don't want to find something that's a shotgun. And I basically came up with some marketing theories on that. If it takes more than one sentence to tell you what a product does for a consumer, it's probably doing too much. And I have a feeling that the whole iWatch thing, people really don't see so far what it does more than what their iPhone does already. And secondly, they're not exactly sure what they should be doing with the thing. It's neat. It's got some neat things. Yes, it's going to do notifications, but the phone in my pocket can hum at me and let me know that it's doing notifications. So maybe not so much that. But, of course, after that kind of went away this morning, they went on to the next thing, which is mobile payments. And we're going to get into that in the next segment, which I think is probably going to make us a little bit more money. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, it is interesting day out here. Let's see if I get, there we go. See my little bit of volume back in my headphones. Anyway, we're going to talk a little bit about it because we've got people asking, and that is about the Pay and Apple Pay is what they're calling it. And the MasterCard CEO came out this morning. He was making the rounds, and they finally asked him a very good question, which is, who's going to pay for this? Why does Apple get any money out of this? And he would just always say, well, you should ask Apple how they're going to make money. Well, it's not for us to say. All I can say is it's not going to change our bottom line one penny. So apparently, I guess Apple is making deals with all these vendors, retail vendors, to take a cut of what they make, maybe speeding up paying for things, maybe adding some kind of value that I'm unaware of, maybe giving back data on what people use their credit cards for so that they can help them come after it. But very interesting in that there is a whole lot of people saying a whole lot of nothing. And every time you ask them about anything and anything that they do with Apple, they say, well, I can't say, well, I don't know. And to me, that's always the hardest part out here is that as far as I know, no one knows how Apple is intending to make money. All that I know is that the MasterCard CEO says that it's not going to change any profit that they make, and they are not paying Apple anything. That only means that the retailer is paying for them. Now, I do know how it's going to work finally, because the MasterCard CEO finally blurted it out. I've been talking for a while about the smart cards and why Europe doesn't have the same problem that we have. If in their credit cards, they have a hard part in the card, a chip in it that does what's known as a one-time pad. This one-time pad is kind of hard to explain if you're not into a lot of cloak and dagger, CIA, NSA kind of thing. But it's a way of it's a crypto way, a way of codes of protecting everything, because you only use it once, and then the next day or the next time you use the next code. The one-time pad has been unbreakable if you do it correctly. Unfortunately, most people do it incorrectly, and there are ways to get in and figure out what everybody's doing. That worked in World War II. They the Germans tried one-time pads, and we found something that they were doing wrong and found a way to crack it. But if absolutely done correctly, then not a problem. It's like passwords. If everybody truly did use passwords that were 12 digits long with a couple of uppercase characters and a couple of numbers and a couple of symbols over the number keys, it'd take 2 months for them to break everybody's password. Unfortunately, a lot of people use password as their password and make it easy to get in, corrupt their accounts, and they use their accounts for evil to send out email. And you're only as strong as your weakest link. Anyway, EMV stands for Europay, MasterCard, and Visa. These guys finally got together in late 1990s and put together this system for having the smart card. Since it's about 50 times harder to figure out a way to crack out the smart card versions of credit cards, everybody in the hacking community goes to where it's easy because, of course, they're the lazy guys. And they use American credit cards because there is no one-time pad. Now, we talked about something else that Apple is really pushing, and that is by using the thumbprint, that is going to be the key to the one-time pad. In authentication, or good authentication, we started talking about this last week, it would be multi-factor. That would be something that you know, and then maybe something you have. Each day that I log into my broker account, I type in my password, and they send me a new card with new one-time pad numbers put in every time. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back, and what can you say? It is an interesting day, and we are going to look what's going on here. I'm going to turn these down and see if this doesn't get any better. No, doesn't seem much different to me, but I've turned them down. So we'll see if that does change anything. See. Anyway, we were talking about EMV, which is the standard for these credit card chips, and that's basically how the iPhone is going to handle all of these. They're basically, instead of having a chip in there, they're going to do it in software in the iPhone. That part of the authentication is going to be, of course, your thumb on the iPhone. There's some neat things in that you can turn off access to that phone remotely, so it would not work any longer, and, of course, scuttle all of the one-time pad for any additional ability to pay. So I think you could do that. My question was, would Android be able to do the same thing? And the answer is, for the most part, yes. There's nothing in here that isn't a fairly well-established standard over the last 14 years in the way that the smart cards have been doing it in Europe. Now, can you forge these smart cards? The answer is yes. And did people do it? They did, until it became such easy hunting on American credit cards and hacking that no one cared anymore. They figured out how to mule the money back. So, for the most part, that's it. Now, when we get to the way that all the cash is made, there are several standards, actually, or substandards of EMV. And Visa, MasterCard, American Express, JSmart, and Discover, the Diners Club, all have them right now. So it's pretty well established, and the big three have them, that pretty much all that anybody cares about. But as we get into this, how is the money going to come out? And the answer right now is when you listen to the people on TV from telling about Apple, the money just comes from heaven. But it looks to me like the only money, at least at the moment, that is going to be made by Apple would come from the retailers. And maybe it's part of this whole iBeacon thing, and maybe just the mystique of you can come in here and use your iPhone to get in and out the door really quickly. But I can't imagine, people that are already paying, and especially retailers, talking about how tough it is to give away 2.5% of their money to American Express or MasterCard or Visa to give yet another 0.5% of it away. So my guess is that they are trying to get in there maybe with 1/8% or something. But it's just hard for me to see them ever doing it. I wondered whether or not American Express or MasterCard and Visa were kind of just trying to stay close to this rather than let it happen without them. And it certainly looks like that way, especially if you believe the MasterCard guy, that Apple isn't going to be making a dime off this. So I don't know, maybe if I've kicked this around too hard, but just something you should think about. I just don't see so far the proof in the pudding, or as the gal used to say, where's the beef? That's always been the tough part of these Apple things, is defining reality from what used to be known as the Steve Jobs reality distortion field. But, I digress. Now, we talked a little bit about going delta neutral, and we'll get into that in a minute, and then get into some charts here in the second half of the show. But the FOMC meeting is September 17th and 18th next week. So go ahead and look for light volume on Tuesday and Wednesday. And at that point, we can probably start thinking about just how light volume is probably going to be Wednesday morning. You only have 2 days till you get to the rollout of Alibaba. And I think we're running out of time fairly quickly on seeing this market die before expiration. And, of course, what do we have? We're off 4 points. I think we're probably going to bounce around this week, probably under 2,000, probably going to ramp this thing up for some big FOMC meeting announcement, have a little volatility, probably the 18th, and then look for these guys to pin this market to some level probably around 2,000 on the S&P cash for that Friday's expiration. Some cash is coming out of some stocks, and we talked a little bit about this yesterday. But it is, to this point, it hasn't been huge in a single stock. But even though the market's kind of turned around here today, we still see weakness in stocks like Amazon and some others out here. When we actually get into the stocks that are showing some strength, that's basically all the airlines, and pretty much on crude being down a bit today. But almost all the airlines are up 1.5% or 2%. And it's hard to say that that isn't probably going to continue at least for the next week or so. I'm looking for crude to get down to $97. I think we've been talking about that for 6 months, and finally it is broken. Probably going to be the last big hurrah for these airlines as we start seeing some stuff. Want to talk about delta neutral because we had somebody email me about it yesterday. In fact, you can always email me at 877-927-6648, or you can email me at path@tfnn.com, or post a message in the bin. Let's see. It is the day that option market makers do go delta neutral. And basically, it is the equivalent of selling arms to both sides. You don't care who wins. You just want to make sure that you don't lose. And part of that is adjusting whatever hedges you have out so that whatever money that you've made so far pretty much is guaranteed. And you do that by buying the opposite side of your trade. If you have puts out, then you can buy another call, or you can buy the equity if you want. Most of the time, these guys will buy the other side of that trade. So if they are basically short puts, then they want to go long calls or long the equity on the other side of that trade. Now, I've heard some people on many of the CNBC and Bloomberg's and basically talking all about how great and how huge the volume is on the 1 week options. And just remember that since a option can be up to 90 days, and of course a weekly option can't be any more than a week, you should see a monstrous amount of volume to actually equal the same value that's outstanding in the monthly options. So I don't want to get into this fallacy of, they're trading a great deal more weekly options. They have to. They're gone in a week. So there have to be a lot more weekly options to equal the same value that's out there. Now, theoretically, the weekly options would be kind of tough to make money on. But if you look at them, generally they are much more expensive because you're down to the last week. And people that do write those weekly options ask for a much higher premium. Generally, the problem with your trade, if you're a good trader, is not that you bought too short a time span. Too long a time span. It's that you bought too short a time span. So I am in favor of probably playing the longer options and not getting too deep into the weekly options. But this is the day when we see, and what I'll see tomorrow, and we'll talk about it on the show, is where the option market makers think that this market is going to expire. And they're going to be working very hard over the next 2 hour and 15 minutes to get pretty far into just that, which is they're going to make sure that unless there was more than probably a 40-point move up or down in the S&P cash, they keep the exact same amount of money that they've made or lost as of today. Even if they're going against them, they don't like to get into these last 8 days of trading where basically on these monthly options, the premium deteriorates so fast that it becomes a huge problem for them to hold them. That's pretty much it. Wanted to get to charts, and I've been kind of slow about getting to them this week. Wanted to see how some of these stocks were working. We are looking at Alcoa. Alcoa wanted to see whether or not this thing is coming in. I think Alcoa is basically telling us the same thing that the car industry is telling us. In fact, the Ford ex-CEO came out this morning warning about the 7 and 8 year loans that are proliferating, and saying he thinks that we're getting into the exact same problem in extending far too much credit. We've been talking about that on this show for a year, that they were getting way too lenient on the levels and the lengths of car loans. Any kind of downturn in the economy could exacerbate it, just like the housing loans. Did see a couple of companies out here at the lows in gold that made me think at least there might be a small respite. The first one I saw out here was Alexio Resource Corporation, AXU. This thing's out testing its low on much lighter volume. The last big low out here was the June 11th low with 910,000 shares. This thing's kind of stepped back down in here. I had this in my newsletter this morning, thinking that I'll go ahead and put it in there. I'm not much thinking that gold's going up, but looks like some of these gold companies are having some level of support down here. That was one of them. I'm trying to remember the other one back here. BTG. I asked Tom O'Brien about this. He said that they probably have far too much exposure to Russia, so he'd be scared of it. And, of course, this one didn't bounce. But another one out here that does look like yesterday it was tested on fairly significantly lighter volume. The June 3rd low on this was 218 with just under 5 million shares. Yesterday we had 3 million shares. It did go below it. It's closed back above it. May not be the one you want to think about going long if a gold did turn around out here, but certainly kind of interesting to see at least a couple of gold stocks show up on my screens in the last day or two. What else did we have? Had some stocks out here that were probably ramping up on a lot of the smartphone hysteria. Broadcom was one of them, and of course this has come up and tested its previous low of July 23rd that had 22 million shares with just under 8 million shares on September 8th. Pulled back yesterday. Volume increased a little bit. Volume up here. If I was to find two sectors that are weak right now, it would have to be anything in energy and a great deal of these stocks that are around the semiconductor space. Another one that's kind of interesting out here is Peabody Energy. Wanted to see yesterday, this thought kind of looked like maybe it was finding support at its July 23rd low at $14.85. Had 8.8 million shares into that big, huge move. And so a lot of volume down in it. You knew it was going to get tested. You had a bounce up to August 20th at $16.71 with 6.2 million shares down to, and a lower low today. Basically, it's closing back below the $14.85, but continue to see fairly low volume out here. So a few of these stocks look like maybe they're going to try to find some support levels, but they continue drifting down. DFT. This was one that was kind of interesting. I hadn't heard of this company really before. It's DuPont Fabros Technology, DFT. This is actually a REIT. It may not be the best description of it here. Hang on just a second. Is a real estate investment trust, engages in the ownership, acquisition, development, operation, management, and lease of large-scale data center facilities in the United States. So I thought this was kind of interesting. If you're thinking that the cloud market has gotten a little bit over bullish out here, it probably has. Going to probably see some winter of discontent as some of these guys start dropping off as prices continue to be dropped in this sector. But down fairly strong today on that light volume test of the July 24th high. Not a lot of volume today, though, so far. Another one we've been talking about the last few days has been Iron Mountain. This thing had the kind of spike out here on light volume. You look at it, highs. It seems to be rather indicative of this market. Not a lot of movement in each other. That's telling me right now that I think that I'm right on my call, and that is that we have a weak market, but this market's not ready to fail quite yet. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, it is a market that kind of has me scratching my head, but I think we're probably right on this thing. Up 5 points on the S&P cash, just under 2 billion shares. So we did go to a lower low, went down to 1982 this morning. Volume is lighter in comparison. I suspect we're going to continue to see some of that continue on through next week, but I'll have a much better read, of course. What the option market makers are going to tell us exactly what they think by the close of the day today. And, you get into the FOMC meeting. We've got enough things to slow this market down. We've got the big IPO next week. I just continue to think that they're going to drag this thing out a little bit farther. The thought is that they could drag it out to the elections. Kind of hard to think that they could drag it out much farther with as much weakness as I see. But and probably we're probably gonna know fairly early tomorrow if we start seeing this market start seeing the volume pull out. And of course, a lot of people saying that the FOMC is going to be doing a great deal of hawkish talk, My guess is that's probably not true. I think we're probably going to continue to see some difference out here. So we will look at that. Other things. What else do we have? MTG, get a couple of them here. Let's look at Now. Service Now, kind of getting into that nice W formation. Wanted to see how this one did. It went into its previous high from July 1st, $64.61, 2.4 million shares. Of course, a couple of days ago, we got it with 1.9 million shares, kind of pulling back. Energy has been light in this last leg for almost all these stocks, and that's why I think we continue to see some weakness in this market. Interestingly, with a market that's supposed to be doing nothing but going up, we still see companies like Monster Worldwide at fairly decent lows. Now, this thing made a high volume low on May 1st with 9 million shares at $5.33. Got into that and tasted it yesterday on 1.8 million shares. Still couldn't bounce. Energy did kind of come off. You did have a high volume kind of plop down on the 5th of August. Kind of been down here ever since. It has tested this. But you would think that Monster Worldwide, who, of course, works with placing people, if the economy was getting that much better, shouldn't this be one of the companies leading the markets and not being lower level? We also talked about Iron Mountain, and not a lot of movement in that. A lot of these stocks that I thought that we probably should be seeing some big signals on if the market was going down, that are testing these very high volume highs on lighter volume. In the case of Moody's out here, $95, July 25th, 1.4 million shares. Best we could get so far is 850,000 shares. Very light volume today out here. They downgraded, I think, Brazil today too. But very light volume back up here at these highs. And, we've gone above it. We're probably going to close above it. And, if volume doesn't come in, you can get 2 or 3, 4, or 5 days in it. I bet if I looked at the options, they're probably going to close this thing out at $95 a week from Friday anyway. You won't see anything new. But, I'm holding my powder dry. I got a few trades out there that I'm looking at, and there may be an opportunity to pick some of those up on individual stocks, but I don't see a lot moving in the indexes. We'll see you tomorrow, same bat channel, same bat time. Sell when you can, not when you have to.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.